Imagine turning $10,000 into over $1.6 million using a strategy that takes just 15 minutes a year. Sounds impossible? That's exactly what investor Joel Greenblatt studied with his magic formula, and the data is fascinating. By the end of this video, you'll know exactly how the magic formula works and whether it's a strategy worth trying. Here's the hard truth. Most people lose money in the stock market. Why? Because emotions get in the way. We buy when prices are soaring, panic when they drop, and chase hype instead of value. Joel Greenblatt realized that to win consistently, you need a system that cuts emotion out of the equation. That's where the magic formula comes in. At its core, the magic formula uses just two numbers to find winning stocks. 1. Earnings yield. Think of this as how cheap a stock is. It shows the profit you're getting for every dollar you invest. 2. Return on capital. This measures how efficiently a company turns investments into profits. In simple terms, is this business great at using money to make more money? By ranking companies using the two metrics, you are applying the magic formula. No guessing, no predictions, just math and discipline. So, does it actually work? Between 1988 and 2004, the magic formula delivered average returns of 30.8% per year. Compare that with the S&P 500's 12.4%. That difference is massive. On paper, $10,000 could have grown into more than $1.6 million. More recent backtesting suggests that while the gap has narrowed, the magic formula has still managed to beat the market by about 3 to 4% on average. The takeaway? The system has consistently outperformed over time, proving surprisingly resilient across different market conditions. Want to try it yourself? Here's the step-by-step process. 1. Visit magicformulainvesting.com. It's built by Joel Greenblatt and is free. 2. Set a minimum company size, like $50 million, to avoid tiny, risky stocks. 3. Buy 20 to 30 of the top-ranked companies the formula recommends. 4. Hold each stock for 1 year, then refresh the list and repeat. The key is patience. Stick with it for at least 5 to 10 years to see the power of compounding kick in. If the formula is so simple, why doesn't everyone get rich? Because most investors quit too soon. The magic formula doesn't win every single year. Sometimes it can underperform for a year or two. But those who stay the course, resisting the urge to bail out, end up beating most professionals. The hardest part isn't the math, it's the psychology. Would you try the formula yourself? Let me know in the comments if you'd be interested in testing it out, or if you'd rather stick with the classic index fund approach. I'd love to hear what you think. If this summary helped, give it a like, hit subscribe, and drop a comment with the next book you'd like me to cover. See you in the next video.